from having a thesis to actually setting up a fund, because that's not
you
easy.
have to be crazy too. It's it takes a lot of time. Right? It takes a lot of time. It's a scaling problem, not a tech problem, because there's the technology is out there. You have to go out and hunt, and that hunting takes time. It can take years.
Kjetil, welcome back for the second time. A pleasure having you on again.
Thank you. Great to be back.
Thank you so much for inviting us home. So I know you recently visited Barcelona for the Seafood Expo. And the reason I want to start there is because it's been a long time since the whole industry has gathered at a conference, I guess. So can you just give us the summary of being in Barcelona? Did you see anything new, or was it just catching up with the colleagues and networking, etc.?
First, I think it was extremely good to be back. It's been a long time, as you just said, and I just met so many people, which I haven't been talking to for a few years. I was just walking around saying hi to people, which I actually forgot the name on, because they're people I only meet at shows, right? So it was extremely good to be back, just talking to people, connecting with the industry again, and basically just get up to speed again and revisit all companies, all relationships, and basically get up to full speed again. I think that was the most important thing for me, at least. And of course, visiting a couple of companies that we have been talking to. And it's always great to meet people at the show, because you can be very effective meeting a lot of people at a very short time. So it was just very, very good to be back, and first time in Barcelona too, which was great.
I can definitely imagine that. So if we're just going to start with seafood broadly, can you just give the short story on how you got involved in the industry, and why I also think it's an exceptional industry to be involved in as a fund, which we'll come to, of course, but just seafood in general, where did you find an interest?
No, like a lot of interests, it was not my choice. It's just the seafood industry kind of came to me more than I came to the seafood industry, because when I look back, I sometimes wonder how I get exposure to the industry. And even though I went to school in Bergen, at that point in time when I finished school was in 2008, and there were no one like coming to the school, presenting the industry, talking about the seafood industry. There was, even though Bergen is considered a seafood city, it was nothing. So I didn't know anything about the industry when I left. And that's compared to now, because now I know the industry is actually active at the school, talking to students, presenting their opportunities. But that was not the case when I was there. So I just started off basically founding a consultant company, and together with a couple of friends and relationships. And one of the cases that I got first basically was a liquidity budget for a cod farmer, which was pretty good, because cod farming at that time wasn't very profitable. So the liquidity budget the curve was pretty steep. And so I was that was kind of my first exposure, was liquidity budget for a cod farmer as a consultant. And it kind of opened my eyes for the industry and how much money and opportunities there were.
But what made you start the company in the first place? Because you said you founded a company, right? So
yeah.
Pretty early on, you started to found companies. But what made you able to say, I'm just going to found a company instead of joining a normal?
I think that's a personality thing, because I got an entrepreneurial bug in me, which so I don't fit in a very big corporation, basically, and it was also not planned. I got a call from a friend saying that there's an opportunity here to start something or co-found something, and I at that time I was working for one of the biggest companies in Norway in the oil and gas industry, and I was working there for 3 months, and after 3 months I said I need to leave. So when I got this call to co-found this company, I said yes immediately, and just left. And then I got exposure to the sector as a consultant, and then I didn't look back from there.
So if you're going to look at seafood as an investment thesis, before starting your fund, you did a pretty good analysis on the protein market. Do you want to sort of just take the listeners through that?
Yeah. But basically, before doing all of that, I was working as a consultant for the seafood industry, basically. And as a consultant, you get paid hourly for for consulting owners of seafood companies. That was my line of work. But after a couple of years, my entrepreneurial bug kicked in again. So I co-founded a shipping company targeting the seafood sector. And when I was trying to fund, I didn't have any kind of background in corporate finance or in funding at that time. I was a consultant, and I had a really, really hard time funding that seafood company, that shipping company. And one of the issues was that I didn't find any professional investors with knowledge of that industry in Norway at that time. Back in 2010, there were only investors focusing on like the shipping industry or oil and gas industry. There were a lot of specialized lawyers, accountants, specialized investors towards those industries, but not towards the seafood industry at all. So when I came to them with my company saying that the seafood industry is a great industry to be in, they were always like, I don't know the industry. I don't like it. Goes up, it goes down. It's profitable one year, losing money the next. I don't. This is not for me. So I had a really, really hard time funding the company, and I need to take a really, really hard beating on the value before I got in any money. When I look back, I learned a lot, and I have my name on founding a company in the seafood sector, which is now a very, very big and profitable company. But after a few years, I saw that my shares were diluted, and I just figured out that I'll take out the money and move on. And then I moved to the United States and took my second master's degree. And when I came back, I just figured out I have to do something with this knowledge gap between financing and knowledge of the seafood sector. And then we kind of sat down and looked at this protein analysis on why seafood is good, because we had to convince people on why seafood is good, because the knowledge was not there on the other side of the table. So basically, instead of me coming to the investors thinking, of course they know that the seafood industry is a very, very good place to be and very, very smart to put their money here, I had to come and say like, why this is a good place and put your money, and kind of educate them from the beginning. And basically that's the overall protein analysis, starting off basically with the growing population, kind of the growing middle class spends more on healthy food. People move to the cities. People in the cities spend more on healthy food. There's more like health awareness from a general perspective. And of course, it's aging population, which also spends more on healthy proteins. And when you put all of that together, you kind of have an underlying growth for healthy proteins on around 2 or 3% annually. Mm-hmm. And if you go and see like, okay, I want to get into healthy proteins, like where to go, then you have to look at seafood, which is a very good place to start. And then you look at how the fisheries is kind of flat. There's no potential growth in the fisheries. And then you know that there's underlying growth of 2 or 3%. And aquaculture needs to support that growth. And if aquaculture is 50% of the total seafood volume, you know that aquaculture have to grow at least maybe 6% only to support the growth. Mm. So you kind of have a very, very strong underlying growth. We used to say like the tide lifts all boats. So if you invest in the seafood sector, you kind of have the tide lifting all your investments. And of course, inside seafood, again, there are a lot of opportunities, but of course, salmon and salmon farming is very attractive. It's a very attractive protein, and while compared to other protein sources, it's extremely good, it's extremely effective. And also when you look at kind of the ESG or environmental, social, and governance perspective, salmon farmers are ranked pretty high. Yeah. So basically, what you have is a protein source which is considered one of the most sustainable protein sources. And if you also add to the equation that we're in Norway, and Norway is a leading salmon producer, I felt like, okay, this is a great place to start. Like how I want to contribute that the salmon value chain will be more sustainable. because if it gets more sustainable, we can also convince stakeholders that they will give us growth.
Definitely.
So it's basically a very ordinary analysis, but it's a very strong one, which has proven right. And that's of course good for us and good for our investors.
Today, there are apps for basically everything. Planning your day, ordering coffee, booking a taxi, well, working out, cooking, ignoring, commuting, getting directions, connecting. While the world moved on, investor relations didn't. Even today, finding relevant information and connecting with the companies you care about is time-consuming and analog. Until now, because now there's Quarter.
Nice.
Quarter, bridging the gap between companies and investors.
You had a thesis, right? But it's a completely different ball game to raising the money, because it seems like, if you had one successful fund, it's very easy to raise the second fund. But to raise that first fund without showing that track record as a fund manager, it probably needs a lot of qualities. You need to be persistent, stubborn, probably. But can you talk to us about that journey from having a thesis to actually setting up a fund? Because that's not
you
easy.
have to be crazy too. It's it takes a lot of time. It takes a lot of time, and it's not easy at all. It's not easy at all, and you have to have that kind of a little bit of the stupidity that you think like I can do this. When I look back, I didn't understand how much work that is and how risky it is and how long it will take. So so basically, we of course, like you sit down and then you have to gather a team. Of course, you have to start with a team and you try to collect people which works good together. You have to also convince potential investors that you have been working with them over time. So because no one wants to get into a team which is brand new.
Yeah, exactly.
Like you don't know each other, guys. So you will quit after a year, and you will get angry at him after 2 years. So an investor will never invest in a team which don't have kind of a very, very strong ties together and a proven work relationship over time. So I have to find that first, and then of course you have to build an advisory network, and of course that is hard. Like, how do you get investors when I don't have experience, I don't have the money, but do you want to be my advisor? That is very, very hard. So you have to work a lot to get a really, really good advisory network on board, and then it's like, okay, how to incentivize your network and how to fund yourself during this time, and then you have to also like start to talk to investors and basically talk to investors saying like, okay, I've never done this before. Can you please give me your money? And so I can invest them in a sector that you don't know. And so the first question is always, have you done this before? No. So you want my money? Are you putting in something on your own money into it? I said, okay, I'm putting in my own money. Yeah, but you're not putting in as much as we do. So it's a constant battle, and then everyone is saying like, okay, this looks great, there's a great opportunity. I will see who others will pitch in, and then you have to go with others. And he's with us if you are. Yeah. Then you have to go back and forth, and I'm kind of broke between potential investors for a time, and then in the end, it's always that you have to have someone that really, really believes in you and kind of trusts you. And for us, we were very fortunate to get Farid on board. But I totally understand why they also took a stake in the management company and saying like, you guys haven't done this before. We need a strong hand on the wheel, which I totally understand. But for us, it gave us the opportunity to build a track record, which we needed when we now founded Bluefront in 2020. Because when we founded Bluefront in 2020, we had a proven track record. We have done it before. Myself and Simon had worked together doing it before, and we were successful in doing it. So and even then, it took us at least a year to fundraise. So to be able to get a perfect size, because there's the second hurdle or the second or the 10th hurdle. If you talk about hurdles, it's a really, really long race. But is in relation to it's in relation to the fund size, because you kind of build a strategy, and if you say like, okay, I want to invest in 10 companies, okay, show me your deal flow. Okay, then you have to work out the deal flow. And you have to do that before they put in the money. So you have to run around talking to the company pretending you have the money even though you don't have the money. And then you do that, you build up a deal flow, potential targets and everything. And then you have a couple of deals like saying that you need, say, 500 million Norwegian. And what happened if you only get the 300 in the fundraising? Like, basically, it's like, okay, I have 300, which is a pretty good success, but I have sold a strategy which is based on 500. So then you go back to investors saying like, okay, I can only do 3 investments, not 5, and then they will say, then I don't get the diversification that I wanted. So then I pull back. So it's a constant. You have to be in constant movement and constant talking to investors, speaking to them, update them on how it's going. Talking to them about deal flow opportunities and hopefully maybe do a deal in the beginning, and then have to give maybe you give some perks to the investors which are on board first, and then so there's a constant kind of dealing and back and forth for at least 1 to up to 2 years before you have the fund closed. And that was the case with us too. It's like we started working with this, and it took us like half a year of planning and then 1 year of fundraising. So like close to 2 years before we were like finally closed. Of course, like in the end, there are tail end on a lot of agreements and stuff. So you kind of have you like half a year before we closed, we kind of stopped fundraising, only like working on the investors which were said like yes, but we're doing due diligence and supporting them in different side letters and agreements and stuff. So, but it's a long journey. I can talk forever about this journey. I was actually in a meeting in Trondheim the other day, and there was a guy from a Swedish fund, and we ended up talking for 2 hours only on fundraising and like, did you do that? How did you do that? Like, how do you think about that? So. And it was a really, really cool meeting, even though we were there for talking about something completely different. It was just so fascinating and meet people who's been through the same journey.
Is there any point during this journey where you are close to giving up? Or do you believe that in order to make this, you need to sort of never think about that? Because if you think about it, now, oh, this is too hard, I can't get the deals right, maybe it's not the right timing. As soon as you start thinking that, it will be so easy to give up. So do you also
there's of course like... That's why I say you have to have a little bit of stupidity. Like you have to just not think about the failure. But of course, it's hard when you kind of work without salary, and then you have a family to support and everything. So that's of course very, very hard. And it's a hard sell telling your family, okay, I got a high paid job, but now I'm going to do something really, really risky. And I don't know if that will success or not. But
but it doesn't come with guarantee, right? So you spend so many hours, but it can be worth nothing, right?
It can be worth nothing in the end. So many hours and so much money you put into something that you actually it's like you don't know, like you basically don't know until the end. And but for me, it was never like I never thought about giving up. I was just so determined that this is my future, and I really, really wanted so much. And I guess that's how an entrepreneurial brain works, and don't see all the risks and don't consider all the options all the time. You just like look at the target and you go 100%. And myself and Simon, we were very, very good in focusing. So we only spent time on the most important tasks all the time. We're like every day we're like, okay, what is the most important task to do? Like there are 100 things to do. But like, what is the most important? Because we got limited time and limited resources. We're only 2 people. There's a lot of nice to do. Yeah. Like, should we do that? Maybe that. Should we talk to him? Maybe it's valuable, but it's a little bit more valuable to talk to him. So let's book a meeting with him and spend time supporting him instead. So that's. I think you have to have that entrepreneurial brain, and of course you have to have that structure and working very, very focused. Because there's so many opportunities to go in this direction. For example, in deal flow, like there's so many opportunities to just look at cases, which is interesting. Yeah. But it's not what I said I would do. So it's like, okay, you got a really, really interesting thing. I think it's really, really cool. but I told the investors to do something else. So goodbye. So you have to be very, very strict on the focus.
I think it all comes back to the saying that if you try to do everything, you do nothing.
Yeah.
Right? So that just comes back to the point
Yeah,
that you have to focus.
Very, very, that's true. It kind of comes back to that. And we, my partner Simon always say, like, fortune favors the prepared mind. So we try to try to always be prepared on everything we do. We're prepared, and then we try to do less, right? So we sort out the activities, and then we do what we do really, really good, and that's kind of the basis of our success. To have that focus and always be prepared, and I think that's like when we come back to investors, we say something, we actually do it, and we do it with everything we have. So I think that's one of our success factors.
Building on focus, one main topic is, of course, the investments in sort of the infrastructure piece. And maybe some people who listen don't really understand why you just can't be an investor, invest in the farm, right? But it's not that easy. So just given that, but it's also, I know it's a clear plan why not to become a farmer, but it's not that easy to become a farmer if you wanted to.
No.
Obviously, there's a lot of money.
I think from our perspective, like I said, we invest in the seafood value chain. We try to make the value chain more sustainable. Because we think the value chain is like, you can't always focus on the farming part. There's so much to take care of in the whole value chain. And of course, like, to have capital exposure towards farming, that opportunity you have in the stock market.
Yeah.
So the investors are like, okay, you invest in salmon farms in the stock market, but a value chain, you don't have that opportunity in the stock market. So that makes it perfect for a private equity structure. Because I'm giving people exposure to companies they can't get exposure to themselves. So and that makes the thesis very, very strong. Because it's hard to say, like, I will put your money in the stock market, right? It's why should you do that?
Definitely. Well, when you're trying to get the deals done, it seems like there has to be an interesting dynamic, because probably if a company is desperate to sell to you, maybe that could be not the best sign in the world, right?
Yeah.
But it's also like maybe the company you want is not for sale. So talk a bit about how that dynamic works, because there has to be a seller and a buyer. And of course, I don't know if this goes for the infrastructure piece, but it has to be fair to say that in seafood, it's a lot of family-owned company, right? So how does that dynamic work? Finding the right companies, but also convincing them to sell.
And that's like one of the things that are hard, and why it takes so much time. And why it was like, why my background was relevant, because when I started up as a consultant, I met a lot of companies. So I had a lot of relationships with family-owned companies. And that started off when I was 24. So or even actually before that. I actually looked back at my resume the other day, and I saw that I was actually punching sea lice in a database when I was 13. So I had to start like kind of present that more. But one of the like that relationship goes way back. And our first investment in this fund, which was Reddox, which was actually a company where I was cleaning the office of the owner of Reddox when I was in high school. So I knew him from then. So a lot of this goes way back. So you can't just call someone and say, I want to buy your company. You have to build relationships over time. And then you have to also show that you can create value for them, that you actually have something to bring to the table. And that needs to be more than capital. It can't be capital, because then you have a lot of opportunities as a business owner. You have to bring something more to the table. And we invest in partnerships. And since we invest as a partner, it's always very good to have a good working relationship. And how can we do diligence a relationship? Okay, it's to talk to them over time. You say, okay, you said that like last year. What did you do this year? Okay, you're actually a guy who delivers what you promise, and then we build a relationship over time. So I have to so my job is basically talking to a lot of companies, even though they're not investable right now, but maybe they will be sometimes in the future, or maybe they'll never be. So there are very, very few investments which comes knocking on your door. You have to go out and hunt. and that hunting takes time. It can take years. Sometimes you're lucky, but often it takes a very, very long time.
If you look at the value proposition you have to propose for a company, because sometimes if I think about private equity, I think about a firm maybe has like 50 employees, so like have a clear structure, like balance sheet optimization, making it ready to go on stock exchange, etc. But this seems like a more boutique private equity firm.
So, no, it's more, that's, I would say like the tickets that we write are more venture capital sized, but that's because the companies in the value chain, it's not very big. So, of course, everyone wants to kind of look at bigger companies, and that's kind of the trend. And if you go for bigger companies, they're often more professionalized, and kind of the things that you do is more tuning.
Yeah.
Than what we do. We do growth, so it's basically growth investments. It's not the traditional private equity which is like split up or buy off stock market or put it on or list or split or divest or that type of strategy. We only do growth. We only kind of look. We talk to companies and say like, okay, you got a strategy now, but if money was not if you had more money, would you think differently?
Yeah.
And if money was not a scarce resource, how would you look at your strategy then? Would you then consider buying your competitor? And then they said like, yeah, I've always considered that, but I never had the money to do that.
Exactly.
Okay, but do you think that would be a smart move? Maybe we can do that together.
Yeah.
So we together can do something that you can't do on your own. And in addition, we kind of, okay, you have been working with this company for 20, 40 years. You have never taken out money. Maybe it's time for you also to take out some money and then reduce the risk, maybe work less, maybe. And in many cases, I talk to owners or to CEOs, which is often the owners too. So, okay, the next time I'm selling the company, you're out, because we will get a much higher value if you sell a company which is not very founder dependent. So we buy a company which is founder dependent, and we work together with that founder to build a structure inside that company so it's not founder dependent when we sell. So basically we open up the door for many more buyers, and also a higher value just to that structure that we build.
When you buy companies, how conscious are you about?
We were not buying; we invest in companies.
When you invest in companies, how conscious are you about sort of the exit strategy? Not at all. Just want to make the company great, or do you always have to think like many parts ahead to see like? Okay,
no, we have to think about many parts ahead. We have to, and I think that's kind of the value that we bring, is that we have kind of a storyboard or a way of doing things, and one of them is that we look at exit candidates pretty early on and saying, okay, that we want to sell, like that company is or that company is a potential buyer. What is their strategy? We have to analyze who they are, so that we build a company which will fit into them. So we're not building a company who no one wants. So we have to build a company who's a great fit for a handful of potential buyers. So that's extremely important, and it's often something that current founders or the founders that we invest together with is not aware of.
Because, like you said, the timing aspect is so key, right? So it seems likely that you can get stuck. Like you want an exit, but then if you haven't done your homework, suddenly it doesn't fit like the right companies, and then
I know. So we have to keep that in mind all the time, because if you do a couple of investments or buy a new factory or change your strategy or reposition yourself in the value chain, maybe you will not be considered as a potential object for an industrial buyer, basically because you did what you did. Mm-hmm. So you have to also think about that all the time. And try to be critical with all strategic investments and see like how does that fit in a potential exit candidate.
Let's talk a bit about the salmon and the salmon price, just because it's interesting, because right now it's rocket high, but I think many people maybe especially 20s, early 30s, don't really know the history of the salmon price. That it hasn't been, this amazing industry all the time. Like there has been some really brutal times before.
Yeah.
But then now it seems like it has found its way, and it seems like an extremely profitable industry and product. Like, what's your bird-eyes view on salmon price, where it's headed? Do you care about that at all? Is it too volatile to really?
No. Also, we tend, of course, like one of our investment philosophies, to tend to invest in companies which are not very dependent on the salmon price. But of course, if the salmon price is low over time, companies will restructure their investment budgets, and you will, of course, we're not that resilient to the price, of course. So we will, of course, but we try to invest in companies which is not hit by that volatile price, which has been very volatile historically. Our philosophy was that we just, like, when we sold our investment thesis to investors, we basically said, like, there's the growth is capped by licenses. The underlying growth for seafood annually is around 10%, and the new farming methods, like land-based, close at sea, offshore, will start to develop or is developing, but it will take a lot of years before they produce any volume which will do anything with the supply-demand balance. So we were like, okay, we said, like, dear investors, I will put your money into us, and put your also money into the seafood companies in the stock market, because we see higher salmon price going forward. It's the level which it's at now. It's way higher than even we predicted, of course, but it's,
and probably not sustainable, right, at this price, or.
I don't think it's sustainable at this price, but kind of you never know, because, like, in the history of the salmon price, we have seen this kind of shift, and then it kind of reestablish on a higher level. So I think it will adjust down, yeah. Of course, but like, if you go back just a few years, back to 2018, 19, or even back to 2016, when we said, like, okay, 62 Norwegian per kilo is a very, very high price. Like, it's not sustainable. And then we experienced growth in production, a little bit growth in production, and then we see, oh, the price doesn't move. So maybe it is sustainable. And now we see the same thing happen again, like in next level.
Yeah.
So what will happen going forward? I think it will adjust down, but I think we'll also see, like, that maybe it will not go back to where it were.
If you take prices, of course, one thing, but there's so much, I don't know if hype is the right word, but let's say keen interest on the new technology. You have offshore, you have people saying that it's not sustainable in the fjords, they want to control the sea lice, the escape, etc. What is your current assessment on, is it only experiments so far, land-based, offshore? Do you see data that makes you confident in having a prediction in this is how salmon farming will look in 5 years, because it's a scaling problem, not a tech problem?
Yeah, I always say it's a tech problem, not a scaling, or it's a scaling problem, not a tech problem, because there's the technology is out there to do this profitable, but it's biology, so and we have to scale it, and that's a lot of learning before we're able to do this. And when I saying to do this at the volume, yeah, which will make a difference, because there's no problem to farm fish on land. There's no problem to farm fish in close at sea or offshore. The problem is to farm a lot of fish, which kind of supports the investment and kind of and make that fish or produce the same fish every time in the same volume without having a lot of setbacks. That's the kind of the issue. But this is the same story about the kind of the net pens if you go back. So it's only a matter of time, in my view, before we see more volume coming out from alternative production methods, and the high salmon price that we see now will fuel investments, and that is what is very interesting for us, because all these new farming methods also builds up a new supplier industry.
Yeah.
Because now we're like the traditional supplier industry for salmon, people producing cages and nets and a few vessels and a feed barge, right? But now they're much more complex. Now it's ozone, it's oxygen, it's hygiene, is much more complex, like artificial intelligence, vision technology, digitalization. There's much more complex. It's systems which kind of fuel a totally new supplier industry, which makes this a very, very attractive investment universe for us. Yeah. And this actually reverts back when we were pitching back in 2020, because I have a slide where I show the S-curve. You can probably get that slide and put it in the cast.
Yeah, let's show.
There's an S-curve, which we learn at school. An S-curve kind of shows the development of an industry. And I said in my pitch back in 2020 that we're in the beginning of the growth phase. And then I showed the American semiconductor industry and said, like, okay, what happens in an industry when an industry is in the early beginnings of the growth phase? And if you look at the semiconductor industry in the US, there's a lot of people entering the space, and you saw a lot of transactions and consolidation. So basically, what you saw was a great environment for to be an active owner and an active investor. And this is exactly what we're now seeing in the salmon sector too, because we're now in the growth phase. We're looking at new opportunities, new production methods, and the industry is on the rise, and a lot of new companies want to get in, and there are a lot of companies which have a lot to bring to the table, because we're trying to farm at land, we're trying to farm close at sea, we're trying to farm offshore, and there's the kind of the supplier industry is just growing tremendously, and gives us a very, very unique position as kind of the pure play seafood private equity investor with basically a long track record. So I think we're in the sweet spot of what we said in 2020 would happen, and it's happened. And there's a couple of investors calling us actually, saying like, okay, how is it going? So it's going pretty good. I hope so, because what you said did happen. Yeah. So I expect that you did capitalize on that strategy.
Exactly. But looking at, if you just take land-based farming, so just giving that there's so much, like ocean is basically the earth, right? So giving all the ocean space. So why does it really make sense to do something like that on land? I understand, of course, you want to be close to market, you want to cut down cost and transport, etc. But why do you feel like there is a need to do farming on land? Or is that
because we have to think about the ocean health? So we have to farm food more sustainable without environmental footprint, and that's what we have to. And if you are on land, you can control a lot of parameters, and of course, I see a lot of opportunities in the sea too. But we have to do it in the sea without pollution or without any effect. I wouldn't say pollution, because it's a discussion of is it pollution or not. No, it's without any effect on the environment, and that's why we introduced the term ocean health. So we have to farm where we consider the fish health and the ocean health at the same time. And if we can kind of balance these two, I believe that there's a great future for salmon farming in the sea, as long as we can also make sure that we don't have any negative effect on the ocean health.
That makes sense. Have you seen the revolution in sort of the cell-based seafood farming, where you take the cell of the protein and try to scale it in the lab? Have you watched that? Because it seems like
it's happening in all food industries.
Yeah, exactly.
So that's nothing new.
Yeah,
and of course, I'm not very knowledgeable about that. I see it's happening. I don't know the technology behind it, but there's always a long way to scale something from a lab to a commercial use. But of course, right now I don't see it as a immediate threat. But of course, in the future, people want to. But I think it's a consumer shift that needs to be happening too.
Yeah.
But that consumer shift can happen fast if it hits. But
doesn't it happen fast in food? Isn't food more slow moving, or do you feel like food can have rapid shifts?
Like I think that food. I'm very, very big fan of the kind of Bill Gates quote that you underestimate the changes that will happen or you overestimate the change will happen in 3 years, but you underestimate the changes that will happen in 10. Because like you try so hard to make a change and it doesn't happen, but when it comes, it happens really fast.
Yeah,
and that's a very, very good quote, and that's something that we've seen across the industry in terms of how they how they use technology, how they absorb new technologies. Like there's been a lot of talk, nothing happens for many, many years, but suddenly like everyone's doing it. So
definitely. Just the last topic I wanted to discuss today is the focus on hiring, culture, and values, etc. Because you're now in a stage where you have started to hire, and I guess you have been conscious about the company culture you want to build, right? Because this is also a company that can have a very long trajectory, given that you have success. So how conscious have you been about setting the culture, the people you hire? Is that something on top of your mind all the time, and something it's very interesting to see out in practice as well, given that you hire now?
Yeah, I think, and we myself and Simon, we sit down and did discuss a lot about the kind of the values that we want to have in Bluefront. And I think our most important value is we call it friendly, and that's basically, it relates to so many things, because first, like, people don't consider investors as friendly. Like it's very, like it's hard. Like to be friendly is actually a competitive advantage. To be friendly, like people, I had an investor last week. He was not friendly, and then but you are. So okay, like 1+ to me. And then also when it comes to friendly towards everyone, like to the management of the company, to investors, just to be friendly kind of with all stakeholders. I think that's really, really important. And also a little bit I try to be friendly against startups and early phase companies, because I think that we fuel or our deal flow is fueled by a lot of startups so I have to support startups and companies, even though they're not investable for me, because maybe they will be in the future. If I only think about myself, like I need to help and try to build as much interest in the seafood industry as possible, because that will help me in the end. And also it kind of relates to how we address people internally, how we answer mails. Like we get a lot of emails from different companies wanting to get funding. We always try to be very positive, always try to find, like, okay, if we're not the right people, maybe you should try contacting him. But we could just not answer or just say no. But we try to kind of have that friendliness, that we try to help and try to be a part of the industry more than just part of Bluefront. And that's what we're saying to new employees. Like, you're now a part of the industry. You have to do anything you can to build this industry. And if you do that good, it will relate back to us in the end.
Yeah, so definitely, like, a thriving ecosystem helps everyone, right?
It does, yeah. But of course, like, you have to have the focus, or you can only do that. But it's very, it's just like some small things, like day-to-day work, when you get emails or calls from people, and just try to be friendly as much as you can, and try to understand that this can be important for them, and try to help as much as you can. I try to bring kind of the kind of phrase which was born in Silicon Valley a few years back, the pay it forward culture. Like, you try to help people without getting something back directly, but if you do that, you probably have a lot of supporters after a while.
And isn't it also that it's a small industry? So if you meet the people in one setting, you'll probably meet them again in another setting in the future as well, right?
Yeah, that's true. And I always tell my kids, is like, be always friendly to people in the supermarket, or like you will never know where to meet them next, like who they know, what's the story, and just be friendly to everyone. I think that's the most important advice I give to my kids: be friendly to everyone, that's the best investment you'll ever do. Like, it will give you so many opportunities just to be friendly to everyone.
That's perfect advice. Just a final question. How high is the ambition set from you and your team? Like, what's the ultimate goal here? Or do you just focus on today, or do you want to be like the world's best seafood fund?
We believe we are the world's best seafood fund. So we believe that we are the most competent seafood investor out there. And that's what we tell ourselves. And I actually truly believe it. If you see our advisory network and the relationships that we have, there's no one that can compare to what we have. So I feel like we are at a good place. But will we be there in the future? That's something that we don't know. Like, so we have to build on the position that we have, and we try to. Our aim is to build a fund asset manager supporting the seafood industry in many phases of the industry, and we do a lot now related to pure water. A lot of our investments is related to water. And that's also a scarce resource worldwide. So we want to build an asset manager around sustainable food and clear water. That's our long-term strategy. But to be able to reach that long-term strategy, we have to be extremely focused. And the only way we will be able to do that is that if our investors get a good return in this fund. If not, we will not have a second fund.
Yeah, that's a perfect ending. Basically, a lot of focus. It's the key.
Yeah. Then we're back to the focus. Like, I have my dreams, we have our strategy, but to be able to realize that strategy, that we have to create value for our investors right now. So they gives us the opportunity again.